welcome back to the Junior Small P channel. Let's get down and serious. We had a fun time discussing Canada earlier, but Arizona ended the income tax on gold and silver. It's passed, it's done. Sound money advocates rejoiced as Arizona Governor Doug Ducey signed House Bill 2014 into law last night. This is from May 23rd, so just a few days ago. But it's still relevant news because we've been discussing this issue on Sound Money for quite some time. Well, it passed the Arizona State Senate on May 10th by a margin of 16 to 13, and it removes all income taxation of precious metal coins at the state level. So I think this is a great idea, a great move in the right direction. We need to do it at the federal level as well. But as you know, they need to penalize metals to discourage people from going into them. That way they can disrupt the free market cycle and the flow of fiat dollars into metals, because as you know, if there was no taxes and there was no penalties for holding precious metals, people would be much more prone to do so. And it's a way for the government to control their monopoly on the issuance of currency and debt. So let's throw off the yoke of tyranny and keep laws like this coming. Moving on. London's gold benchmark hit by volatility after banks exit. Saw this headline and asked myself, what is going on here? What do they mean by London's gold benchmark hit by volatility after banks exit? Well, London's gold benchmark experienced large, unpredictable fluctuations after some banks left the auction that sets the price relied upon by the $5 trillion a year bullion market, according to Reuters analysis of trading data. The benchmark is meant to be a fair and accurate daily snapshot of the fast-moving, quote, spot, unquote, market, and is used by gold producers and consumers around the world to price contracts. Its level is set by the London Bullion Market Association gold price auction, which sees big banks and brokers electronically input their trading orders with an algorithm matching buyers to sellers and setting the price. We've discussed this before on the channel and kind of broke down the trading of gold and how the spot price works. Pretty technical garbage. So this is going to touch on that, but it gets pretty interesting here because they do discuss manipulation. So try to stick this video out if you can. Trading volumes fell sharply after April 10th when 4 of the 14 participating banks and brokers stopped taking part after the auction's administrator, Intercontinental Exchange, also known as ICE, introduced a requirement to clear that meant participants had to modify their own IT systems and procedures. Lower liquidity, which fuels volatility, led to the benchmark diverging more widely from the underlying spot price, according to the analysis of ICE and trading data, leaving gold buyers and sellers around the world with large, unexpected gains or losses. So this could point to some of the things that have been taking place in gold recently. Market and banking sources have told Reuters that ICE had moved fast to introduce clearing into the benchmark before the London Metal Exchange launched a rival set of cleared gold futures contracts in July, even though not all participants were ready to use the service. 4 sources familiar with the matter said that ICE was warned by at least 2 participating banks that the loss of those banks who were not ready to handle clearing would make the benchmark significantly more volatile. The LBMA referred requests for comment about the price divergences and the effect of the banks leaving the benchmark to ICE. ICE declined to comment. You will see many declined to comments in this article. Clearing, where an exchange acts as an intermediary to guarantee and settle trades, is regarded as a necessary progression for the gold trade as tighter regulatory capital requirements increase the cost of trading off exchange. ICE has said it will widen participation in the auction by making it easier for newcomers to join, and will ultimately boost liquidity and reduce volatility. Indeed, quantitative trading firm Jane Street Global Trading joined the auction on May 15th. Manipulation fears. When clearing for the auction was launched last month, 4 banks, China Construction Bank, UBS, Standard Chartered, and Societe Generale, ceased participating. The reason, according to 10 banking sources and an LBMA source, is that they did not have the necessary IT systems and procedures in place and were thus suspended from the auction by ICE. I smell a fish. I smell a fish here. UBS, Standard Chartered, and Societe Generale are highly unlikely to rejoin the auction, according to 3 sources familiar with the matter. I wonder if this is because they're making it more strict. I mean, 2 of these banks, their names are familiar to me when it came to accusations regarding precious metals manipulations, as well as being caught. That's all I'm going to say. That's all I'm going to say. UBS, Standard Chartered, and Societe Generale, get this, they declined to comment. While China Construction Bank did not respond to requests for comment because it did not understand due to a language barrier. The volatility was heightened by the reluctance of participants to add so-called flexible liquidity to the benchmark by buying or selling gold during the auction to ensure it stays close to the spot price. Traditionally, banks did so, but most changed their approach after the scandal over the manipulation of the LIBOR interest rate benchmark and are now unwilling to intervene beyond inputting their orders beforehand, fearing that might be construed as price manipulation by regulators. 5 banking sources said that of the 14 banks and brokers that participated in the auction before clearing began, only 4 at the most were willing to adjust their orders during the auction. These were key to keeping the benchmark stable because they could respond to imbalances between buy and sell orders, the sources said. At least one of the 4 banks that left the auction last month were among those willing to offer flexible liquidity during the auction, according to the sources. Quote, adjusting liquidity definitely went down after clearing began, unquote, said one of the sources who works at a bank still involved in the benchmark. On April 11th, when the divergence was $12.20, buy and sell volumes did not change for much of the auction as the benchmark moved away from the spot price. The remaining participants in the benchmark are Bank of China, Bank of Communications, Goldman Sachs, HSBC, ICBC, JP Morgan, welcome to the club, Morgan Stanley, Scotia Makata, Toronto Dominion Bank, and International, INTL FC Stone. Goldman Sachs, JP Morgan, Morgan Stanley, Toronto, basically every bank, a lot of these big banks, they declined to comment. The Bank of China, Bank of Communications, HSBC, ICBC, and Scotia Makata did not respond to requests for comment. So basically, no one wants to comment, they're not available for comment, and they're declining to comment. These are the big banks, ladies and gentlemen. These are the guys that are controlling the gold price. And, it's always mysterious to me that something that's so barbaric, so archaic as gold, something that really has no use, we shouldn't own it, we shouldn't hold it. The only reason these banks hold it is basically out of tradition. That it gets so much attention, and there's so much secrecy and shadow work involved with how the price is determined and found and how it's handled. It's got to be interesting. Look how much effort internationally is exhausted based on just trying to discover the price of gold on a day-to-day basis. A lot of secrecy, a lot of shadowy stuff going on. And still on the topic of this, look, here we go. London Bullion Market Association launches code of conduct for precious metals markets. The London Bullion Market Association is launching a code of conduct aimed at boosting confidence in the $5 trillion a year London gold market, it said on Thursday, following years of heightened regulatory scrutiny of the city's financial sector. The guidelines set out best practice in ethics, governance, compliance, and risk management, information sharing, and business conduct. The Bullion Markets Trade Association said in a statement. The code is an important step forward to build greater trust, consistency, and transparency throughout the market, LBMA Chairman Paul Fisher said in the release. I always get kind of chills whenever anyone who represents government or financial institutions talks about taking any steps forward. The word forward perturbs me. The LBMA said it's more than 140 members, which include banks, refiners, traders, and fabricators, will be required to sign a statement of commitment to the code, which will be mandatory from June 2018. Please tell me you guys find it ironic that a financial institution or groups of banks and individuals such as this forcing people to sign a document declaring they're going to adhere to some codes of ethics is funny. I mean, it's hilarious. It's absolutely hilarious. The code is one of 3 developed as a result of the Fair and Effective Markets Review, and it's got an acronym, the FEMR, of the Fixed Income, Forex, and Commodities Markets, which was commissioned by the UK government 3 years ago after British banks were fined billions of pounds for trying to rig benchmark interest rate LIBOR and manipulate foreign exchange reference rates. So there you go. People have been caught. People have been rigging things, and there's been manipulations in the past, including precious metals, which we've talked about here on the channel. The FEMR found that informal codes of practice across these markets had often been misunderstood or disregarded, especially in bilateral over-the-counter OTC markets like gold. Oh, misunderstood and disregarded. That's a great excuse. I'm going to use that. Sorry, I misunderstood the stop sign. I didn't know what it meant. And I also disregarded it, so I kept going. A lack of internal controls and personal accountability had meanwhile contributed to what it called, quote, ethical drift. I'm writing that down. I need to use these excuses in my life. Ethical drift, unquote. Okay. Sorry, Your Honor, I was suffering from some ethical drift at the time. I misunderstood the yield sign, and I proceeded through the intersection disregarding the laws that are written for traffic movement. These are the things these people talk about. This is definitely applicable. In the wake of the LIBOR scandal, London's precious metals price benchmarks or fixes were reconfigured, while the LBMA overhauled its management structure last year and announced moves toward trade reporting. Rising concerns over regulation and a resulting push toward greater transparency have fueled speculation that more of London's OTC gold trading could move onto exchanges. Something changed in the silver market in May. Here are 3 reasons why. U.S. Silver Eagle sales surged 140% in May versus April, and we still have another week remaining in the month. According to the recent update by the U.S. Mint, Silver Eagle sales reached 2,005,000 so far in May, compared to 835,000 in April. That's up 140%. And the article lists 3 reasons why this might be the case. 1, there was an extremely large purchase by a single wholesaler in the Northeast. 2, the small retail buyer came in a big way as premiums were lowered the most in 7 years. A group of respected technical analysts gave a buy signal for the silver market when silver was trading between 16 and 16.25. Potentially big trouble in Big China, China's downgrade, could lead to a mountain of debt. This is from Bloomberg News, May 24th. The downgrade of China's debt by Moody's Investors Service may push Chinese companies to borrow even more money from domestic banks as overseas debt becomes more expensive, increasing risks for the nation's finance industry. With growing indebtedness at home, compounded by a slowing economy, there's a risk of a negative feedback loop, said Kun Go, head of Asia Research for Australia and New Zealand Banking Group, who sees state-owned enterprises and property developers feeling the biggest impact. The downgrade will particularly hurt airlines and shipping companies, said Corinne Ping, Chief Executive Officer of Crucial Perspective in Singapore. Even before the Moody's announcement, some Chinese companies were struggling to adjust. Ambitious conglomerate Lico, which last month scrapped a proposed $2 billion acquisition of Californian TV maker Vizio Inc., has struggled to raise funds and plans to lay off more than 300 employees in the U.S., keeping about 50 people. S&P action, more bad news for China may be on its way from rival agency S&P Global Ratings, which in January maintained a negative outlook for the country and warned of a possible downgrade in the coming months. In response to a request for a comment, S&P referred to its January statement on the negative outlook. I'm quite curious what effect this could have when one of the largest nations that hold U.S. debt starts having financial struggles and debt problems of their own. May make financial changes and call upon what we owe them in order to solve their fiscal crisis. So we'll see what happens with China and how it might bleed over and affect us here in the United States, the West, possibly even Europe. Speaking of Europe, EU shocked to discover UK may walk away with no deal. This is an interesting article referring to the Brexit, and I am on the side of the UK, as always with this particular issue. The EU now faces the shocking discovery that the UK is not Greece. The EU does not hold all the cards, and the UK is able and willing to simply walk away from ever-escalating EU demands. Bloomberg reports UK threatens to quit Brexit talks if it faces massive bill. This divorce is getting expensive. The UK will quit Brexit talks unless the European Union drops its demands of a divorce payment of 100 billion euros, 112 billion US dollars. Brexit Secretary David Davis said, Britain's negotiations on leaving the EU would otherwise be plunged into, quote, chaos, and even a £1 billion settlement would be, quote, a lot of money, unquote, Davis said in an interview published in the Sunday Times. The size of Britain's exit bill and which types of negotiations can begin before it has been agreed has been a source of debate for weeks. European Commission President Jean-Claude Juncker has said the UK will have to pay about £50 billion, while Luxembourg's Prime Minister, Xavier Bettel, has signaled a figure between 40 billion euros and 60 billion euros. The Financial Times estimated the cost could balloon to 100 billion euros, while a study by the Institute of Chartered Accountants in England and Wales put the cost at as little as £5 billion, or $6.5 billion. We don't need to just look like we can walk away. We need to be able to walk away, Davis said. Under the circumstances, if that was necessary, we would be in a position to do it. EU is shocked by the UK's stance on Brexit. Euro intelligence confirms things I stated long ago. The UK is able and willing to walk away. The UK is not Greece, and the EU nannycrats still have not figured this out. Euro intelligence is discovering that its repeated expectations for a deal may vanish into smoke. Good. You don't get a deal. How about that? You don't get any money, EU. Just go be your little socialist utopia and see what happens. EU finalizes Brexit position as UK threatens to quit talks. This is again from May 20th. So as you can see, this story is circulating. It's in multiple headlines. I can't wait to see how it ends. Full circle, final article coming in on Chinese influence on global gold price may increase. Talking about China again and gold again. New York Scrap Register, as the largest buyer of physical gold, China's influence on global price discovery seems likely to increase, said Citibank in a research note. Shanghai still holds a prominent position as the largest gold futures market outside of the U.S., despite a reduction in Shanghai futures exchange volume for the year to date to around 450 million ounces. By comparison, New York-based COMEX gold volume has grown 15% year-on-year to around 2.1 billion ounces. That's billion with a B. Hence, while market participants continue to reference the LBMA 3 p.m. close and spot gold prices, both in dollars per ounce, Shanghai prices, renminbi per gram, should eventually play an increasingly important role, said analysts at Citi. Analysts later added, we could see London 10 a.m. prices, in particular, derive more market sentiment from China over the midterm. We covered this article earlier in the week, but I want to reiterate it because of what's taking place with the LBMA changes there. There's definitely something happening in the gold trade, in the gold market, and a lot of things, a lot of new things are taking place just in the last year. Not only the Shanghai Gold Exchange, this current ethical thing that's taking place with the LBMA over there in England, and then also you have to look at what took place with the entire Muslim world and their change with Sharia law and how they view investment in precious metals and how people can purchase precious metals now. So that's a large part of the population of the globe that is now open to the purchase of precious metals. Now you probably are wondering, well, hey, Junius, why have you not mentioned Bitcoin? Why are we not talking about that? Well, I don't like talking about that much, and it's obviously doing some incredible things right now. The charts for Bitcoin are explosive. It breached 2,400 yesterday. I believe it breached 2,700 this morning. You're hearing things like if you had purchased $100 of it, you'd have 28 or 70 million dollars today. So it's performing in a way that is very similar to tulips. If you've ever read the book Botany of Desire, read the chapter on tulips, tulip mania, what took place there, people turning in 1,200 Dutch guilders for a single bulb, others turning in 10,000 Dutch guilder coins for a single tulip bulb, and then losing everything in the literally snap of fingers, blink of an eye, gone, up in smoke, all of their wealth. Right now, I believe what we are witnessing, what we are seeing is panic buying. You are seeing people panic that did not get into Bitcoin. They're just hearing about it maybe for the first time or learning about it. And it's reaching a mania, a fervor, a fever pitch. And it's nice to sit on the sidelines, make popcorn, and watch this unfold. I've got decimal 0085 Bitcoin. That's all I've got. The only Bitcoin I hold was given to me by a gentleman and a scholar, a friend, a subscriber here on the channel. And I don't slam people that have it here. I know there's a lot of you that are part of this channel that have done very well, that hold Bitcoin and exchange it for precious metals. And for that, I applaud you. I do. You guys outthought me in that regard, and you really pushed forward and gambled with it. And you're doing good because of it. So I hope you don't lose anything. I don't want to see any of the subscribers here get caught with their pants down, or when the music stops, get left without a chair. Because I think the music's playing right now, and it's the Bitcoin music, and there's not going to be enough chairs for everyone to sit down. When people start yanking money out, or when this thing starts to plummet, or whatever happens, there could be a tremendous amount of wealth wiped out. It's performing like a bubble, like a mania, like tulips. And I think it's going to reach a point where it might be dangerous for some. So don't put in what you can't afford to lose. If you haven't purchased yet, I would tell you, you might have missed the boat. The boat's probably sailed. I don't plan on doing anything with this. It's not something that's for me. I'm comfortable where I'm at in life. Yeah, I could have $100 million right now, but would I be happier? I'm still going to pass away one day. I still live a good life. But yeah, I missed that boat. That's all right. I would have transferred it into gold by now, for sure. I'm pretty sure as soon as it had hit $1 million, if I had enough Bitcoin, once those numbers converged and I saw that there was $1 million in there, I would have transferred it. Probably 100,000. I mean, I would have jumped out by now. I'm confident in that. I just don't have the faith in it. It's highly complex. I've talked to a lot of people about it, even people that held Bitcoin. A dear friend of mine held over 20 Bitcoin, or he sold 20 Bitcoin about 2 or 3 years ago. Sold 20 Bitcoin. And yeah, he could have kept them and had 80 or whatever $1,000 today, or whatever that would equate to. But he didn't. And one of the problems is that the triple layered security that surrounds it, the complexities in transferring it, the keychains. I'm telling you right now, it sounds simple to a lot of people, and please don't take this the wrong way. I don't want to insult you guys, but a lot of it really is nerd talk. And not a lot of people like nerd talk. And if you're gonna, and there's people out there that I know personally that no matter what, I mean, I work with a lot of people, and a lot of people that I work with are fairly smart. Not one of them holds Bitcoin. Not one of them would consider holding Bitcoin. For that reason, I just don't see it having a utility as a currency at this time. I think it's, pardon me, I think it's a fad. I just don't think it's, and I know you guys disagree, a lot of you disagree with me, and that's okay. That's why we can have opinions and discuss these things. Let me miss the boat. Don't feel sorry for me. I know you don't. I do have a Bitcoin wallet. Hey, I'll post it. If you're really feeling generous, throw some Bitcoin into my Bitcoin wallet, and I'll immediately transfer it into gold. I just won't hold it. It's just, again, it's not for me. I have a wallet. It was given to me by a friend here on the channel, or he showed me how to do it. Anyways, and I have it. And that's it. That's the end of it. I've never purchased Bitcoin, and I will not purchase Bitcoin. There you go. That's my last bit of input on that. Have a good day. Thanks for being here, part of the Junie Smallpy channel. I hope some of you made it to the 26-minute and 37-second mark. Have a good day, and please like, share, subscribe, and continue to be part of the Junie Smallpy channel.